Hello! So previously we talked about various different types of trusts that are available. One obvious sort of miss that we haven't spoke about is a life insurance trust, and this is something that a lot of people should be considering. So what is a life insurance trust and why is it so important? Well, a lot of people have life insurance for the obvious reason that they want assets to be paid off and debts to be cleared when they die, and we don't know when that's going to be. I hope to be here for another 40-50 years, but if I'm not, it's nice to know there's a pool of money in a life insurance policy that will pay out. The last thing I want, however, is for that large chunk of cash to sit within my estate and get taxed for inheritance tax at 40%. So what can I do to avoid that money forming part of my estate? A life insurance trust. Now, you should, in my opinion, be advised about this when you set up your life insurance policy. So speak to your IFA, speak to your accountant, speak to whomever you've got a life insurance policy with. They will most likely be able to point you to the right place. If they can't, we can help. But the idea is we set up a treasure chest, the policy then sits within that treasure chest. When you die, it pays out to the treasure chest. Meaning two things. One, your trustees, the key holders, have immediate access. No need to wait for probate. Immediate access to these monies that can pay out to a spouse and children straight away. Fantastic news. And two, those assets belong to the trust and not your estate. Meaning they don't form part of your estate for inheritance tax purposes, meaning you're not going to lose some of it to HMRC, an added bonus. So, life insurance trusts. Your homework for tonight, if you've got life insurance policies in place, have they been written into trust? If not, ask yourself, why not? If you haven't been advised that they should, ask yourself, why haven't I been advised? And maybe send an email or two or give me a call. Thanks.